Welcome to this week's look at the state of the New York City real estate market. Wow, this report is for the very end of January 26th to February 1st. Hard to believe it, but we are done with January. We are into February, and the market is already showing signs of life. Looks like we're ramping up for this, what will hopefully be a great spring market. We'll get started now with the luxury market. There were 33 contracts signed last week in the luxury market. That is 10 more than the previous week. Very interesting. This luxury market of ours just keeps marching right along. We sometimes have a week or two where there's a pullback and then it just picks right back up again. The number one contract for last week was 82E at 217 West 57th Street. It was asking $27,700,000. It was reduced from just under $35 million when it was listed back in 2018 off of floor plans. This unit has just under 4,300 square feet. It includes 4 bedrooms and 4.5 bathrooms. The apartment has floor-to-ceiling windows, 11-foot 7-inch ceilings, and almost the entire unit faces Central Park. A similar unit, sponsor unit, 84E, closed in June of 2023 for a little over $25 million. The building is Central Park Tower. It is a 1,550-foot tall skyscraper with 179 units, and it is promoted as the world's tallest residential building. Over 50,000 square feet of amenities include indoor and outdoor pools, a fitness center, a children's playroom, a clubroom on the 100th floor that includes a ballroom, dining facilities, and a cigar lounge. The number 2 contract was 43S at 50 West 66th Street. It was asking just under $24 million. It was raised from a little over $22 million when building started marketing off of floor plans back in the summer of 2022. This unit has 3,547 square feet, includes 4 bedrooms and 4.5 bathrooms, a living room with 14-foot 6-inch ceilings, family room, and a 141 square foot loggia face Central Park. A similar sponsor unit, 48S, closed in November for $23,499,000 and change. Amenities in this new 122-unit condo include doormen, a fitness center, indoor lap pool, an outdoor saltwater pool and jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and my favorite, a dog washing facility. Last week, the total weekly asking price sales volume, $312,625,000, average asking price $9,473,485, median asking price $7,950,000, average discount from original ask to last asking price 4%, average days on market 417. Okay, well, very nice showing in the luxury market, up 10 contracts from the previous week. That's pretty great. Any questions about the luxury market, post them below. Reach out to me directly at Sotheby's. We're going to take a look right now what's going on in Manhattan and Brooklyn. So in Manhattan, the supply rose somewhat modestly this week to a little over 5,200. We're seeing that our inventory's slowly continuing to build. However, that is still 5.5% below where we were last year, already low from last year, and the inventory is still pretty tight as we approach the full spring season. New listings were lighter than expected. On the demand side, 30-day pace rose to 690. That's a 14% gain from the previous week, and weekly signed contracts climbed 19% to 183. So this could be an indicator that buyers are beginning to make their moves and making offers, going into contract. The spring season isn't quite fully ramped up yet, let's call it that, but we are definitely getting there. The supply for the week in Manhattan, 289, that's up a smidge, a little over 6%. Contracts signed for the week, 165. That's up almost 8%. And the off-market properties rose fairly significantly, 54%, 134. The supply for the month in Manhattan, 1,171. That is up 148%. Contract signed, 696, down 15%. Off-market properties, 528, down almost 38%. Market Pulse reading is up almost 2% from last month and the same from last year. The Liquidity Pace chart, 30-day moving window, signed contracts, 696, down almost 10% from last month, down almost 2% from last year. If you have any questions about the Manhattan market, post them below, reach out to me at Sotheby's. So let's talk about Brooklyn now. Then we will talk about mortgage rates. We will talk about some other market information that will be helpful to you. And we will also talk about strategies for success. If you are an active buyer or seller in this market, definitely going to want to stick around for that. So the Brooklyn market continues to be a bit pokey. The supply rose slightly to just under 3,000 units. That's up about 1% for the week. It's continuing this slow, steady climb, but the new listings were surprisingly low, with just 124 added this last week. That is down nearly 3%. That is not so typical this time of year, so we're going to keep an eye on that. The demand remains soft as well. The 30-day contract pace rose 5% to 376, but the weekly deal volume fell to 86, which is down about 15%. That is the second time this year that Brooklyn has failed to break 100 weekly contracts. Unlike Manhattan, Brooklyn has yet to kind of shake off what we think of as kind of like this quiet period that comes a bit after, right around the holidays, and then just after that. The weekly supply for Brooklyn, 132, that is down about 4%. Contract signed 95, also down 4%. Off market, up almost 32% at 58. The supply for the month, 676, is up 65%. Contract signed 391, that is down a little over 18%. Off market 258, that is down almost 45%. The latest reading for the Market Pulse in Brooklyn, down a little 2.4% from last month, same from last year. And the 30-day moving window of contract activity, this Liquidity Pace chart is showing us 391 contracts signed. That is down almost 14% from last month, down almost 11% from last year. So what's going to happen with Brooklyn? Time will tell. Now we're going to shift, talk about mortgage rates, strategies for success. Be sure you stick around for that. Any questions, post them below or reach out to me directly at Sotheby's. So as I said, luxury market, woo, marching right along. 33 contracts signed, 10 more than the previous week. Condos vastly outsold everything else. 24 condos went into contract. 5 co-ops, 1 condop, and 3 townhouses. Condos, new development, continue to dominate the luxury market, which means they are dominating the market because over the last year, the luxury market continues to be outperforming every other sector of our market. The supply in Manhattan in total, as I mentioned, 5,247, Brooklyn 2,926, pending sales 2,823 for Manhattan, 1,671 for Brooklyn. Off-market properties, Manhattan 4,539, Brooklyn 2,205. Average days on market in Manhattan, 80, Brooklyn, 68. Looking at these mortgage rates now, we see that they are averaging for 30-year fixed between 6 and 6.3%, 15-year fixed between 5.4 and 5.8. But here's the thing. These rates they're really varying. So if you are looking to finance, be sure that you shop around a lot, perhaps. Make sure you're getting the best rate for you. Our charts this week are looking at seasonality in terms of contract activity, specifically how monthly deal volume compares to historical norms. While recent years have been dominated by below-trend months, 3 of the last 4 have broken above the seasonal average, hinting at a possible shift in momentum. January may or may not finish in the green, depending on how much of the current pipeline closes before month's end. But signs of life in the Manhattan market, and activity is reportedly building. February and March could well shape up to be the key, let's call them measures, for whether 2026 can outperform recent years. Looking at Brooklyn, at the same thing for Brooklyn, the Brooklyn trend remains flat. Not a big surprise given everything that I just said before this. The monthly volumes continue to hover at or below their long-term averages. There are a few standout months over the past couple of years, but unlike Manhattan, where in recent months we've seen more upside, Brooklyn really seems stuck in pokey gear. I won't even call that low gear. Let's call it a pokey gear. Whether it's a function of soft demand or limited inventory, or perhaps both, pattern's pretty clear. This borough really needs something to get it into a much higher gear, a non-pokey gear. So with the mortgage rates kind of edging lower, we may see a bounce back in the spring. But for now, the Brooklyn market is definitely running quiet. So what can you do if you are a buyer or a seller in this market? We didn't really get into price action, but understand that prices are kind of holding steady as they have. They've been a bit flat. We did have a recovery, not in all price points, not in all property types, not for all properties. We did have a bounce back after COVID. It took a while. COVID seems very far away, but as we're measuring the price action, it is important to remember that, New York really suffered a setback all the way around. Prices, volume of deals, number of buyers, all of that. But I'm not saying that's where we are now. I'm saying we recovered from that. Took about 18 months, I believe. But what we're really seeing here as we're looking at what's going on in the Manhattan and the Brooklyn and the luxury market is that this kind of high-end, all-cash market, luxury market, is doing well. They've also had to deal with some price adjustments, those sellers, developers, but overall, there are more buyers interested in engaging. The rest of the market, the below 4 million, where people are typically financing and are a little more sensitive to economic, let's call it economic turbulence news, we've seen a kind of pullback. So if you're a buyer and you are in the market now, you're dealing with slightly less inventory. It doesn't mean that there aren't new things coming on or that there aren't things to buy, but be aware that, we are kind of in this low inventory environment. If you're looking for the best opportunities, it will be in those properties that have been on the market 120 days or longer. Those sellers are likely to be a little more negotiable. You may have a little more leverage there. There are plenty of nice properties out there, so be sure that you're looking at everything that could work for you, and do be mindful that while even with those properties that have been on for, as I said, 120 days or more, most sellers are not going to just give away their properties, and there's no reason for them to, but they may be more negotiable than a seller that just came on the market, because we're still seeing bidding wars with those. So be aware of the comps. Be sure you're getting good advice, and be sure you're educating yourself about what's going on in the market. Sellers, be very careful about how you set your asking price. This is not a market to be ambitious. I know you want to get the most money. Everybody does. Your brokers want that for you. as well. And also be aware that the sooner you sell, the more money you make. You're carrying it less time. You have more value from the perspective of the buyers. And let's be reminded also that it is the buyers who determine the value, not the sellers and not the brokers. The buyers are the ones that ultimately are making this purchase. It's their money that is funding the purchase, so they set the valuations in any given market for any given property. So sellers, be strategic, do yourself a favor, price yourself in alignment with the market. That way, if it's meant to go higher, it certainly will, but it'll go more quickly. You'll have very focused buyers, enthusiastic, competing, hopefully, for your property. You don't want to be lingering around. It's not in your best interest. Any questions? Of course, you can post them below. You can also reach out to me directly at Sotheby's. Always happy to discuss specifics with you about your particular situation, whether you're buying or selling. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I will be back with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.